What's up, tycoons? What's up, traders? Super excited for today's video on Happy, all right? Ticker symbol HAPI, coming at you guys with a viewer request. I do those every single week. So if you want to see your token, your cryptocurrency in the next video, all you got to do is comment down below. So there were some warning signs that we went over on the MACD and as well as the relative strength index that we could have some type of a pullback. Now we were tracking this bull flag right here, this bull flag pattern. We broke the trend line, but we're still holding our major retracement levels of support, which is a good sign. So we may end up getting a 5-wave move to the upside, which is something that I'm watching out for, right? 1, 2, 3, 4, 5 up to our bullish price targets up here. But there's a few things that we need to do before then. What we're going to do, if you missed the last video, we're basically going to explain the warning signs that we had and how to use these signals and different strategies. So that way you can navigate the battlefield that is cryptocurrency. I like to say trading is like going to battle. It's like going to war. You need to have the proper weapons at your disposal and know how to use those weapons. So that way you can give yourself an edge in the market and increase your odds of success on the battlefield. So what we're going to start off by looking at is going to be our MACD right here. If you take a look, there's something called exit and entry signals on the MACD, and it's going to be when this blue line here crosses below. That's an exit signal, okay? If you see it cross above, see how it crossed above right over here, and then we got a sharp move to the upside. Okay, an exit signal is going to be when it crosses below, and it could indicate a big drop to the downside, right? And so in the last video, I said, hey, the blue line is up here still. We haven't crossed below yet, but if we do end up crossing below, you need to be cautious, right? We need to be cautious of that because we could get some type of a pullback. And sure enough, we did get a pullback. But we'll go over our major retracement levels that we're holding right here. That's a very, very good sign. Okay. Now, something else you can do is you can also take a look at your RSI, which stands for Relative Strength Index. This is going to measure the relative strength of a token at its given price. So what we're seeing is we have a high right here, okay, and then a higher high right over here. So clearly the token is in an uptrend going up in price, making higher highs. The relative strength index should mirror that, but in fact, we get a high and then we get a lower high right here. So notice how this is in a downtrend while this is actually in an uptrend. This is what's known as bearish divergence, and it's an indicator you could see some bearish activity. So right here, we get bearish divergence, okay? And then shortly afterwards, we get a MACD sell signal, and we've had a move to the downside. All right, so to me, this pullback was foreseeable. We were really just trying to see, maybe did we already pull back and possibly are we going to, break out of this bull flag pattern? But we didn't. So we can go ahead and get rid of this just so our chart is a little bit cleaner now. Okay, and what we've got is basically a healthy pullback, a healthy retracement. So the way you use these, okay, the 38.2, 50%, and 61.8, these are your three most important and well respected retracement levels. Nothing moves in a straight line up and nothing moves in a straight line down. What you get is a move up, retracement, continuation of the trend up higher, or a move down, retracement, continuation of the trend down lower. You can spot a reversal when you break through those retracement levels to the upside or to the downside. So if we zoom in a little bit more here, what we can see is originally what we did was we had this nice move to the upside, right? So what we did was we connected our swing low down here up to our swing high. So we have this move to the upside. We retraced and look at where we found support right at our 50% retracement level. Okay, we did that and then we continued that trend and headed up higher. So what we're doing now is we're looking at our most recent low to our most recent high. Okay, so what that means is I'm connecting this low up to the high up here, right? And so we have the move up, we have the retracement, and now we're continuing back upwards in an upwards direction. But we need to be cautious that we don't do something like this. If we break through our 61.8% retracement level, which is going to be 15.3396, then we could be looking at a reversal in Happy. Okay. Now, I want to be clear, these are not breaks, okay? This is what's known as a wick of the candle. And what it means is that, the price opened up here on this candle. It went all the way down here, but we found support. We found buyers around the R61.8 retracement level, and we closed above. Same thing on the next candle. We opened right here. We went down below, but then we found buyers. We found support, and we pushed back up higher. So it's all about where the candles close. If you start to see them close underneath, right, and you're seeing like a wick here and then the body of the candle right here, and you're starting to see it close below and it can continue to close below, then that's what it means to break those retracement levels. So right now, things look good. Things look justified for a healthy pullback. What we're going to look for is we're going to look for a MACD crossover. So we want to see this blue line cross back above the orange line. Notice how over here we crossed back above the orange line, and then we got that move to the upside. That's what we're going to look for on our MACD. And as far as the relative strength index goes, we're going to look to see if we can form a bullish divergence, which is going to be the opposite of a bearish divergence. But currently, we have no relevant divergences on our chart. So, we're just monitoring these things, looking for signals. Now, this line right here is 70. This is what's known as overbought on the relative strength index. As you can see, we're actually closer to 50 right now. We're actually at 50.64. So, we're healthy, right? We're still showing relative strength. We're above 50. And we have room to go to the upside now, back above 70 on our RSI. So that's what we're tracking. Now we have a breakout level. Okay, our breakout level is our previous high here of 23.4695. If we hold our retracement levels and continue up higher, we could put in a double top up here if we don't break out and head above. So we really need to break out past this level. That's why I have it in blue, or we could form a double top and end up getting an M pattern like we have on the screen. But if we're able to get our breakout past there, we have some bullish price targets to the upside. Okay, so our bullish price targets, they are going to be 25.67. Okay, then we have 26.83, 28.48, and ultimately 36.60. Now there's a lot of work to be done. We just went over all of the work that needs to be done. We need to see the MACD line cross back above. We need to hold our major retracement levels right here. We need to break out past our blue breakout level of 23.46. And, that's when we have the possibility of continuing up higher and hitting our bullish price targets to the upside. So hopefully you learned something new in this video. If you did, make sure to smash the like button and subscribe to the channel. I do these viewer requests every single week. So if you want to see your token, your cryptocurrency in the next video, all you got to do is comment down below.